The bar was very low heading in. And the one thing you have to remember, each year, every single year, Wall Street sell side comes into a new year with a pitch. Last year, it was the reflation trade. And by the third, fourth quarter, people had given up on higher yields. Bonds had rallied. Steel stocks were in the tank. And then a couple of months later, the reflation trade came about. But in other words, the street had it wrong in January. This year, the trade was global synchronized growth. The entire street, the most long trade in January was in emerging markets and long the euro and long Eurozone assets. And now here we are in the third, fourth quarter now, and the entire street has given up on global synchronized growth. We heard it 1,000 times in January.
It didn't work out. People lost money and they gave up. So does that make now the perfect time to get in when everybody's going the other way?
Absolutely. And this has been happening every year over the last 7 years. The trade consensus for that January, by September, back up the truck. And European stocks, German equities down here, EWG ETF, European banks, you want to be moving into these assets because the street has just thrown them out, and they've thrown the baby out with the bathwater.
Let's talk Brazil. The Brazilian market is soaring on the idea this right-winger, Jair Bolsonaro, is going to become the next president of Brazil. The market likes it. I'm trying to figure out why. Do you like it?
We do. There's a real populist alliance in this hemisphere that's fascinating. You've got Mr. Macri in Argentina, Mr. Bolsonaro in Brazil, the AMLO government in Mexico, and we love Mexican equities. We love Brazilian equities. Commodity-producing countries with higher yields is the place you want to be. And at the end of the day, if the Fed softens the policy path a touch because of this the global wrecking ball that is the U.S. dollar, Brazilian assets rally.